Hello traders, Gary Wagner here just before 12 o'clock in Honolulu, 5 o'clock in New York. It is Thursday, August 24th, 2017, and this is the Daily Report for Gold and Silver. Bated breath as the symposium put on annually by the Federal Reserve kicks off today, and speeches by both Mario Draghi as well as Janet Yellen are scheduled for tomorrow. Because of that, traders are awaiting and markets are muted and slightly lower. Gold trading off approximately $3 on the day to close at $12.91. Low today well above our current stop, which sits below $12.85. Silver did break once again below $17, off about 8 cents on the day, closing at $16.96. Fractional upside move in the U.S. dollar, 93.20 settlement price, and U.S. equities modestly lower with the Dow losing 28 points, 21,783. The NASDAQ losing 5 points at 62.73, and the Standard & Poor's at 24.38, a decline of 5 points. Traders, today, the annual economic symposium put on by the Federal Reserve got underway. Markets are for the most part muted, with the dollar slightly higher and gold and equities with slight downticks on the day. The real fireworks are set to go off tomorrow as both Mario Draghi, the president of the European Central Bank, and Janet Yellen, chairwoman of the Federal Reserve, are scheduled to have their marquee speeches, and as such, traders, market participants, investors are really awaiting to see if any new news comes out of those statements. It is widely believed that nobody wants to rock the boat, and we won't get any critical information as a direct result of comments made tomorrow. Gold currently trading off about $3.60. 1291.10, that is our current print. But what is evident in the market has been a compression of sorts as we look at the daily activity on this bar chart, that we've had a series of higher lows over the last few days and lower highs. So we've had a series really of inside trading days consecutively throughout the week, and we are approaching the apex of that triangle. And traders, as with any compression triangle, what we look for is, as the market price approaches the apex, we expect a release of energy. In other words, energy has been building up as the range continues to reduce, and you get a strong break, which can either be to the upside or downside. Typically, on a compression triangle, the break will be to the prevalent market direction that currently exists. In this case, we would have to define that as a bullish tendency. Now, given the fact that we have a compression triangle currently forming in the marketplace, and we spoke about a pattern called a scouting party yesterday, which is a pattern that was coined by Steve Nissan, I believe a high likelihood that we will see the break to the upside. In essence, what a scouting party is, traders with weight behind the size of their orders will go in to test the resolve of the opposing troops. So the bulls will try to move prices above resistance, and in this type of battle, the bulls will have to analyze the fortitude of the bears. If the bullish scouting party can set up camp in the bears' home field that is above resistance, then a beachhead is formed. And traders, as you can see, we absolutely have seen a scouting party exist in the marketplace over the last week or so, and now it's just a matter of time when we reach the apex. So traders, my recommendation is to maintain your current long position. We are long at roughly 1283. Maintain your current stop, which sits just below 1285. Traders that are shy or nervous of this upcoming set of speeches by Yellen and Draghi can at any time go ahead, take that stop to the market and pull profits. At this point, if you pulled profits here at $12.91, you're looking at about an $800 per contract profit, as opposed to If in fact we're incorrect and the break comes to the downside, we get out with $1 or $2 profit. And traders, when we look at U.S. equities vis-a-vis a weekly chart, we're looking at the Dow Jones Industrial Average weekly candlestick chart. We can absolutely see that this week contained a slight uptick in the market. However, when we convert this to our daily candlestick chart, we can see that we have had slight declines over the last couple of days where we have lower volume, muted trading as market participants ready themselves for any possible fireworks that come out of the Fed's annual economic symposium. And traders, the same can be said for the dollar. Dollar is marginally higher, 93.23. We can see that we have absolutely seen this market trade in a defined consolidation pattern. And the easiest way with candlesticks to identify consolidation is really when you see tight trading ranges, meaning the candle size is about the same from candle to candle, and you get alternating color from red to green. Here we have a couple of greens, then we go red, then we go green, and so forth. So we can certainly see that this market, the dollar, is in a state of consolidation with alternating candle color and very, very narrowly defined trading ranges. Traders, as we await speeches by both the president of the ECB and the chairwoman of the Federal Reserve here in the United States, we have quiet markets. I don't believe that we will hear anything that is completely out of the frame of reference in terms of recent statements. I don't think any new knowledge will be obtained with tomorrow's speech. I think we will see a reiteration of what both of them have been saying, a continuation of loose monetary policy and low interest rates. The one thing that is quite probable or possible tomorrow is an increase in volatility, a whipsaw market, as traders absorb any of the statements that are made during those speeches. This has been Gary Wagner wishing you as always good trading. We will talk to you tomorrow from the weekly wrap-up and review. Bye-bye.